So in terms of where we are at the moment, obviously on the 17th of March, the Chancellor announced a £20 billion package of support to businesses eligible to pay business rates. The first element was a 100% relief scheme for all retailers and businesses in the leisure and hospitality sector, covering the whole of the 2021 financial year. There's guidance been issued for that, which actually sets out the criteria and which sectors are eligible for that scheme. And it has obviously been expanded over the last 2 weeks to include other areas, but essentially it's intended to cover all those businesses and retailers that were eligible for the retail relief scheme in 2019-20, obviously shops, bars, pubs, restaurants, and obviously the criteria was extended to include independent cinemas and live music venues in the 2020 March budget. And obviously it's also been extended now to include the leisure and hospitality sector. So that will include cultural and arts venues, theatres, museums, gyms, for example, and also businesses associated with sort of leisure and assembly, such as clubs, halls, institutions, etc., and also sports venues such as sports clubs, which will include, private tennis clubs, private golf clubs, etc.
Is now
and
joining.
Also in the hospitality sector, caravan parks, hotels, B&Bs, etc. So it's very broad-ranging and representative sector of the UK economy, potentially covering about 30 to 40% of the business rates base, and potentially higher in some authorities, depending on the nature of your rates base, because, while offices, for example, and manufacturing and industrial premises aren't eligible, in some authorities, it could well account for the majority of your rates base being eligible. In other authorities, it might be as little, perhaps as, for example, the City of London, as 10 to 15%, because they're much more office focused. So it does have quite a different impact across the country. So I'll quickly cover the rates relief scheme first, and then I'll get on to the grant scheme, which is in some respects slightly more complicated, which is obviously reflected in the fact that there's been various lengthy discussions and multiple versions of guidance issued on this, which has obviously highlighted some of the complexities around the scheme. So in terms of the retail relief scheme, I've covered the broad sectors that are eligible for it. It's also worth bearing in mind there has been a bit of confusion over eligibility for some particular types of businesses, particularly those that operate membership schemes, such as, for example, private gyms or sports clubs, tennis clubs, golf clubs, for example, bowling clubs, which, we had discussions with MHCLG on, and they've been very clear that while there is sort of this criteria about the venues having to be generally accessible to members of the public, the authority should take a wide interpretation of that and include bodies that have membership schemes and don't offer pay-as-you-go entry, such as those clubs I've identified, the major gym chains, but also to include private members clubs which operate closed memberships, such as
is now joining.
Gentlemen's private members clubs in London, golf clubs, and also country clubs, for example. So I think MHCLG are encouraging authorities to take as wide as an interpretation of this as possible, but obviously bearing in mind that all the reliefs are granted using your Section 47 powers under the 1988 Act. So in theory, a local authority would be within its rights not to grant any relief under the Retail Leisure and Hospitality Relief Scheme, and also has the discretion to exclude certain businesses or sectors that it may not consider to be desirable or offering benefits to the local area. So that remains a local discretion, but obviously we're keen to ensure as much consistency as possible that your local politicians do have that discretion, but obviously bearing in mind that the government is going to fund 100% of the costs. There doesn't seem to be much merit in doing that, but it does remain potentially a local choice. Now, I'm aware we've had a number of issues, concerns expressed about the state aid arrangements for both schemes. So I'll cover where we are in terms of the retail relief scheme. The UK government has made it very clear that it does not consider the 100% retail, leisure and hospitality relief to be state aid, and therefore there are no limits on the level of relief that can be granted. So major supermarket chains, major department stores, etc., major hotel chains, major gym chains should all receive 100% relief on their premises, irrespective of rateable value or state aid issues. It isn't the case in relation to the grant scheme, which I'll cover separately. Just to be very clear on that the UK government, as reflected in the revised guidance issued last week, is clear that state aid limits do not apply. And while the EU hasn't expressed a positive opinion on this, the fact that it hasn't actually expressed a negative opinion suggests that they are content to let that matter lie, because obviously it is potentially controversial because it is a sectoral based approach rather than, as is the case in the scheme in Northern Ireland, where it effectively applies to all businesses where they're getting a 3-month holiday.
Now joining.
So in terms of the mechanisms and operation of this, it's also worth bearing in mind that it does also apply to other local authority supplements that are levied, including the Crossrail business rate supplement in London and also the City of London special multiplier. It does not automatically legally apply to business improvement district levies. Now, BIDs can obviously take a local decision to grant parallel relief, obviously having regard to what's been agreed in their ballot arrangements for their levy, but they obviously have a local choice as to how they move forward on their levies, but they're not automatically legally obliged to follow the 100% relief scheme locally. In terms of the administrative arrangements, authorities are required to report by this Thursday, I believe, back to MHCLG in terms of estimating the cost of their the 100% relief schemes and also the nursery relief scheme, in order that MHCLG can calculate the costs and therefore pay the Section 31 grants due to billing authorities. So to be very clear on that, billing authorities will inevitably bear the upfront costs of granting the rates relief because the NNDR1 returns have been completed and instalments are agreed. So they will receive the benefit of the full cost of that, not just for their local share, which will be 30% in London, or potentially 80% of the local share for shire districts in shire areas, but also the share for their preceptors, and also, as we understand it, the MHCLG central share, which is 50% in authorities that don't have pilots, and will be 33% in London, where we have a separate GLA pilot. So you'll bear the costs up front, but you'll also be fully compensated through Section 31 grant for those costs. And MHCLG have yet to confirm exactly how and when that support will be delivered. We're obviously keen that local authorities receive as much up front as possible and ideally get some instalments before they make their first April instalment payments through the central share and in relation to top up and tariffs before the first instalment on the 30th of April. And obviously we ideally hoping that MHCLG would agree, as they did with the NNDR1 release, to front fund a lot of that, or potentially, if we can, make enough of a strong case on that, to provide billing authorities with the full funding up front. But obviously that's a matter still to be negotiated and be decided with MHCLG. So you'll bear the cost up front as billing authorities, but you'll be fully compensated for all the costs, including the central and preceptor share. And then as part of the year-end NNDR3 process for 2021, there will then be a reconciliation through the surplus and deficits. So you'll pass on the preceptor cost to the preceptors via reduced revenues, and similarly to MHCLG via the central share, but also then you'll repay effectively the Section 31 grant relating to the preceptors and MHCLG, so that it would be effectively net neutral. So obviously we can answer any questions about that if people have those, but it's obviously just worth reiterating that point, that there shouldn't be any direct cash flow issues arising from that. But we do appreciate that authorities will face some challenges in terms of collection, which again we anticipate will have to be dealt with through the year-end collection process, but that's worth keeping an eye out on. And obviously if there are any issues that do emerge, particularly lower collection rates for those sectors that are paying business rates still, such as offices, just to make that clear and report that back through various contacts, whether it's London councils or the LGA or to MHCLG, so they have an appreciation of the challenges you're facing. Now, I've covered the sectors that are eligible for the scheme, but obviously there are a large number of sectors: industrial, manufacturing, public sector bodies. Obviously, public sector bodies are not in any case eligible for Section 47 relief or in the context of local authority premises, whether they be preceptors or billing authorities. But obviously, there are a large number of those sectors that aren't eligible. So you end up with this quirk whereby major supermarket sectors are potentially getting businesses are getting £3 billion worth of business rates relief. But if you're an office with a rateable value of 15,100, you don't get any extra rates relief and you don't qualify for the grant scheme. So there are some areas of inequity in the scheme, which obviously people are identifying and pointing out. But ultimately, we're in a position of implementing what the government schemes are, and clearly you have the scope locally and through your representative bodies to point out anomalies or raise issues of concern with MHCLG, but it doesn't look like there's expected to be any further movement on the schemes that have already been announced. But that doesn't mean that the eligibility criteria cannot be extended, as has been done for bingos, estate agents and letting agents, and also for spas and I think massage parlours and venues, wellness venues was the other criteria that were added later on in the day. And clearly there's further scope for changes later on. But clearly a lot of high street businesses, you know, such as those providing professional services, such as accountancy firms, solicitors, you know, medical services such as vets or dentists, don't qualify for the relief schemes, which is, you know, slightly odd quirk, but obviously that's just reflected in the guidance. They weren't eligible for retail relief in 2019-20 either. So in terms of moving on to the grant schemes, as you're aware, there are 3 grant schemes. There's a £10,000 grant for all businesses in receipt of small business rate relief, which, while it has a number of potential criteria, is generally businesses operating a sole premises with a rateable value of £15,000 or less. Now, there's also some slight quirks relating to that in relation to workspaces, incubator spaces, etc., which have already been split for SBRR purposes, where the intention is that the liable party, the small business, should receive the grant for the space that they generally occupy, obviously not the workspace landlord or operator. So local authorities should be putting in place arrangements for those areas to actually try and get the grant, the 10,000 grant payment to those sectors. Obviously, that does raise issues about workspaces, etc., that haven't been split for SBRR purposes. And, you know, we've been advised that there is some potential for local discretion, you know, taking into account whether, you know, arrangements were already in place to split those. But again, you may want to seek further advice on that from MHCLG about how you deal with those. So that's the SBRR scheme, which is very clear, and that shouldn't be any issues in terms of that with state aid limits, because those businesses will generally, in most cases, only be getting one £10,000 grant. In terms of the retail, leisure and hospitality sector grant, there is a grant of £10,000 for properties up to including rateable value of £15,000, and a grant of £25,000 for properties with a rateable value between £15,001 and £50,999, which is obviously the threshold for moving from the small business to the standard multiplier. But there is no support or grants available to properties above 51,000 RV and above, which obviously does throw up some anomalies around eligibility criteria, and obviously is quite a blunt instrument. Obviously, there have been some press coverage in the last couple of days about the slight oddity of businesses at the £15,000 SBRR threshold who only get the £10,000 grant but don't qualify for any business rates relief either, because they're the upper end of the SBRR threshold. So, you know, there are a number of businesses, I think it's been highlighted, 3,500 across the country with a 10,000 grant eligibility who are at 15,000 RV, who probably might feel a little bit hard done by, again, because of that threshold. There have been 4, well, I think you might argue 5 guidance notes, because one was withdrawn one morning and then reissued the next day. They've been issued by Bays, who are leading on the grant scheme. And I think hopefully we now have the final guidance, version 4, that was issued yesterday, which covers the state aid issues and the state aid declarations. So in terms of state aid limits do apply to the grant scheme, but at the higher €800,000 threshold that was announced by the European Commission a couple of weeks ago in relation to grant aid to businesses. But bearing in mind that is obviously an EU-wide threshold, so where you may have companies that operate elsewhere in the EU, they will be expected to provide state aid declarations before getting eligibility for the grants. Now, this obviously does mean, given the threshold and the 800,000 state aid limit, that some major retailers, for example, major hotel chains, could in theory get £25,000 grants up to the sterling equivalent of €800,000, which is about £700,000. So I think my recommendation at this stage, until things are clarified, that, you know, you don't grant the 25k grants to recognisable major national retail players. because it's still a bit unclear exactly how the scheme will operate for those, because obviously there'll have to be a judgment then if it was granted which 28 properties across England, a major chemist chain or a major supermarket chain might receive grant on. So I think at this stage I would probably hold off on paying grants to those particular businesses and then focus on the small and medium-sized enterprises within your area that you can be confident would have fewer than 25, 28 properties across the country. Now, I also mentioned that I'd highlight the fact that there are obviously similar schemes operating across the UK. So Scotland and Wales have decided to replicate the scheme announced by the UK government for England. Slight difference in Wales that I think they've recently announced that the 100% retail, leisure and hospitality relief will not apply to premises above 500,000 RV, which would obviously exclude quite a large number of large supermarkets and large department stores in Wales. And in Northern Ireland, they've adopted a slightly different approach where they've gone for a 3-month business rates holiday for all sectors apart from public sector bodies and utilities. So that's a slightly different approach they've adopted in Northern Ireland, but obviously bearing in mind that they obviously may have regard to what's being done in the Republic of Ireland around business support that's being delivered there. So in terms of the grant schemes, I hope people are generally clear about the principles about how they operate. There are inevitably some quirks, as I've highlighted, around thresholds and implementation and state aid limits. So you will be required to seek the state aid declarations from larger firms as part of the grant process. I think the intention is, in terms of the administration and delivery of the grant, that as far as possible, authorities should not have application processes in place. Now, I'm aware that a number of authorities have put up online on their websites sort of forms asking businesses to apply and supply bank details and email addresses, because clearly one of the big challenges you have is that probably the vast majority of ratepayers, particularly those in receipt of small business rate relief who may not have paid business rates for several years, that you won't have email addresses, you won't have bank details necessarily. So I think rather than seeing them as application process, that they're potentially mechanisms for you to seek the information you require in order to enable you to pay the grants. But we accept that some authorities are going down the bank payment approaches, other authorities are issuing checks, but we recognise that with their systems and the arrangements in place, not all authorities have the ability to deliver that. So I think that's just very much a general introductory run through of where we are on the schemes. And I'm aware that some people are starting to ask a few questions as we go down to, and it's obviously helpful if anyone who has questions can post them on the chat and we'll do our best to answer them. So I think I've had a couple already around Lenny Jones. Council relying on incorrect data in order to identify who qualifies for grants. The VOA data is at least 6 months out of date. How are you supporting businesses that have lodged appeals which have not been actioned? And also a second one, also believe the law states that businesses mainly used for retail purposes relying only on usage classes, which is not the correct interpretation of the law in this respect. So again, obviously you can pick up some of those as we go along, and obviously any further points that anyone wants to raise. But I'll probably hand over next to Douglas Ollie at London Councils, who's I think due to talk briefly around some of the legislative and accounting issues that arise from that, particularly in potentially in the context of the London business rates pool. So Douglas, I'm not sure if you're around on the call to join in. Well, we seem to have a slight issue with Douglas there. So perhaps if I hand over to...
participant is now joining.
So perhaps if I hand over to Adrian Blaylock at CITFA, who might be able to provide a little bit more background and context about how things are developing nationally, and obviously given CITFA's key role in providing advice and support to local authorities about how to implement the schemes, and also some of the developments that have been taking place in the last day or so around, closure of accounts issues, etc., and how that might impact on, reporting generally. Okay, Adrian.
Yeah, thanks, Martin. Okay, morning, everybody. I'm not quite sure how much more I can add to what Martin said, to be fair. We do now have the current final guidance of the childcare discount, the retail discount, and the eligibility for the grants. in terms of how, because I was asked to speak, how they impact on businesses. I mean, a lot of the issues that I've seen coming through from a business perspective really relates to the fact the requirement is what does the rating list look like on the 11th of March? And this kind of links to the question that came through from Lenny. The requirements for the awardings of the grant, or the payments of the grant, relate to the position of the rating list as at the 11th of March. In terms of the actual the valuation of the property and the properties that existed in the list at that point, and also in respect of the ratepayers on the business rate systems of each local authority on the 11th of March. So I'm not quite sure how we can support those businesses where they've lodged appeals, and the VOA haven't got round to dealing with them. Obviously, there has to be a cut-off point to where we sort of say we can't go back again, because we're still getting changes to the rating list now that are backdated a number of years, and obviously we don't want to be administering these grant schemes and in sort of 3-4 years time. So the reason the guidance was written in the way it was in terms of the rating list on the 11th of March and ratepayers on the 11th of March was to avoid that problem. But I do accept from a business perspective that potentially causes problems, because why should they miss out just because the valuation office haven't dealt with that appeal, or the billing authority hasn't changed their records to reflect the fact that a ratepayer has changed. Now, there is a sort of a general exception to both of those requirements in the guidance, which basically says that the billing authority has the discretion where they were aware that their records were wrong on the 11th of March to actually make investigations to pay the grant to the right person. So there is the discretion there for a local authority to actually look at that and say, you weren't the ratepayer, this person was, therefore I'm going to pay that person to that grant to that person. So that's hopefully that answers the question that you've had, Lenny. If I'm honest, I don't understand the second part of it, so I'm not going to go into that one just at the moment, but hopefully we'll pick that up in the panel session at the end. In terms of the accounting requirements, we are very clear that the business grants are not part of collection fund. Business rates, sorry, the reliefs are part of business rates going to collection fund. The grants are not. Business rates is being used to identify the eligibility for the grants, but actually they don't touch collection fund in any way, shape or form. So there should be no impact at all on collection fund from any of the business grants. Now, one of the things that we have been asked, particularly around the administration of the payments, and I know that some authorities are using their business rate system to actually facilitate payments. They have the mechanism set up already to pay something to business, so they're using the business rate system to do that, and that's fine, because it shouldn't impact on collection fund, providing any bounced refunds are reversed out. So if you imagine you've put, I don't know, £20 million of payments into your system as a dummy cash file to facilitate the payments of that £20 million to business, if a refund that you send bounces back, the back payment is rejected, whatever, then that payment has to come out of the dummy payment file. So in effect, payments always equal refunds, and therefore the net position is zero in your debtors balance on your business rate system. So that's just sort of one word of warning on that side of things. In terms of the accounts, things seem to be changing every day as regards deadlines. I saw an update this morning that said that the decision has been made not to accept a reduced requirement in terms of the accounting code of practice, that we will be expected to continue to do accounts as normal with an extended deadline. So I think the end of August for the draft accounts, and the end of November for the audited accounts, if I remember rightly the dates that I saw this morning. It was rejected yesterday. The suggestion to reduce the accounting reporting requirements were rejected yesterday, so it's back to a full scale meeting the code. I think I've covered everything there. I'm sure you'll let me know in the questions if I've missed anything. So I presume we're handing over to Martin Hinckley now.
Yeah, that's the
Yes.
plan. But I think before I just do that, it's probably just worth following up a couple of things in relation to 2019-20 accounts. As the expectation is now that the NNDR3 submission deadline will now be the 31st of July, linking into the 31st of August deadline for the draft accounts. And MHCLG don't think it's likely they're going to be able to issue the NNDR3 pro forma until the 1st of May due to staffing issues. Obviously in London, the Crossrail Business Rate Supplement 3 return has already gone out, but obviously the NNDR3 is likely to be delayed. So obviously we can pick up on some of those accounts issues, and obviously further the questions have been asked at a later stage. I'll hand back to Martin Hinckley now.
Thank you. One of the things that being last to speak is everybody else has covered most things, but the one thing to say is that everyone, I've spoken to an awful lot of authorities, and an awful lot of authorities are doing it slightly differently, but with the same main aim. So I won't replicate what's been said already. I think the key for us is priority. So the number one priority for BESS, MHCLG, our businesses is to get the grants out. Getting a bill that says nil when you know you're going to get a bill that says nil is not as important. So all our efforts are trying to go on getting the grants out as best we can. So I give you a few practical things how Westminster's doing it. I'm not saying it's right, and I'm not saying it's the same as everybody else. But we're doing it in tranches. So we're doing the SBRR cases first, then we did the existing retail relief ones, and then lastly, the bigger one is the new retail relief, which we need to do. Following roughly the same process each time, we get a spreadsheet of who we think is going to qualify based on the criteria we know about. We review that in detail and exclude any ones which we think should be excluded under the rules. What we're doing then is sending a letter telling them we think you'll qualify. That was originally set up because we hadn't got the ability within the first few days to make payments. That just gave us a little bit of breathing space with telephone calls, etc. We're then using the NNDR system with a dummy cash file and then producing refunds out of that. That's in 2 stages. BACS refunds where we've got DD details, we're doing those straight away. Ones where we haven't got BACS details, we're looking on each account for email addresses, emailing the people because a lot of the businesses are shut, and saying, if you want a check payment, give us an address we can send it to if it's not the property, if you can't get there, or give us BACS details. That's worked relatively well. We're lucky in that we can produce BACS and check payments, where quite a few authorities who are a bit more digitally enabled than us only take BACS, can make BACS payments, but that's sort of thrown itself back to the mix somewhat. So that's the sort of same process we're following. With the new retail relief ones, what we're also doing is looking, as Martin said, we're looking for anybody you'd recognise in a high street and taking them off, and we're going to put them into a mop-up tranche 4, if you like, set, where we're going to look at those later. But we'll probably have to write to them before we actually pay them, your Tesco's and the rest. So that's really the grants. The expanded retail discount, as I said before, we've left putting on the allowances onto the system for those and updating the existing retail allowances, primarily because people know they're going to get a nil bill. So we'll do the grants first. Nurseries we were able to do quite quickly because the criteria is relatively easy and we had a database of the Ofsted list. Other things that we've done, obviously, direct debit, we're trying to pull out and stop any direct debits for anybody who could get any sort of relief. Fortunately, we've now got quite a few direct debit dates, which makes it more difficult each time. As everybody knows, there's a lot of categories which don't get relief, such as offices. What we're doing in those cases is asking them if they want to put an NNDR hardship application in. We've parked those to the end of April to see how things have progressed and how many we get. But what we do with those is slightly difficult. Recovery hold, we put all recovery on is held from reminder through to enforcement agents, so that's fine. I was on the BESS MHCLG calls. You'll have seen the reference to using Spotlight. Spotlight I have to say, in my view, only does one thing, which tries to pick out dissolved and liquidation cases. My view is very little use, as they won't have bank accounts anyway if they're in liquidation. However, I don't think anybody's going to try and, well, the people I've spoken to are going to use it as a post-award tool. And I've also seen some advice about providing masses of details post-award. I think we'll deal with that when we come to it. So overall, that's sort of a rough guide to how Westminster doing. I'm not saying it's right or wrong. I think the only thing I would definitely recommend is you get the grants out as priority above everything else. Thank you.
Yeah, thank you, Martin. I mean, I just reiterate that point. I mean, the government, very clear, ministers across BEIS, MHCLG, the Treasury, the priority is to get these grants out. We accept that there may be some errors. Obviously, you'll do your best to try and minimise fraud, but I think the priority is to make sure these businesses keep going, surviving, still paying business rates in 5 years' time, and also still employing people. And therefore, you obviously should, as far as possible, having regard to the guidance, to take a relatively generous approach from the perspective of your businesses in terms of awarding the grant, obviously having regard to the issues we raised around larger players who obviously would make sense not to award any grants right front. So I think if we now go to deal with some of the questions that have been raised, there's obviously an issue about usage classes according to the BOA list and how accurate that is, particularly in terms of grants. And we accept, obviously, there will be an element of local review in terms of the grant payments, and obviously recognising that you could be in a situation of having paid out the grant incorrectly in good faith. But I think that is the sort of nature of where you're working to. You can only work on the best available data that you have in terms of the current uses classification. And obviously there may be some issues about changes that occurred just before the 11th of March that weren't picked up, where you potentially might pay a grant to the incorrect occupier, but hopefully those cases will be relatively minimal. But you know, that's the nature of what we're doing, trying to deliver this very quickly in a short period of time. There's also an issue raised about the tax position on grants, that these grants are taxable. Now, this will presumably only affect, you know, a very small proportion of large firms that are paying corporation tax. So you'll be aware that there's one large supermarket chain that is about to declare a £1.8 billion profit that's going to get £700 million worth of business rates relief, and also pay a potentially a £550 million dividend to its shareholders for the 2019-20 financial year. Now, we can all take a view about the merits or the morality, but obviously that is they benefit from 100% rates relief under the scheme the government has announced. So, you know, they will obviously, if they do ultimately get grants, will, you know, presumably have to pay corporation tax on those as a contribution towards their income. So, you know, that is an issue, but hopefully it will only apply to a relatively small proportion of larger businesses. And given the £700,000 sterling equivalent limits, that shouldn't hopefully be too material for those companies. The vast majority of SMEs getting the grants won't be liable to corporation tax. We've also had an issue raised around an update on where we are on business improvement districts. I'm aware that obviously a number of business improvement districts will have cash flow issues, and obviously they've got to keep their organisations running because they will employ staff. Now, the GLA has raised this as a concern with MHCLG and Treasury last week, and they said the government was looking at this and they will come back to us and the sector more generally on that in terms of support they can provide, because obviously there's different approaches that could be adopted. And I'm aware that some bids have decided to delay issuing their levy bills for 2020-21 until later in the year. Some are obviously considering whether they ought to replicate the 100% retail, leisure and hospitality relief scheme. But obviously bearing in mind, relative to the size of the business rates bill, the bid levy is quite small, and you obviously may want to have regard to your sector's office, industrial, manufacturing premises and other non-eligible properties as to whether, you know, they may also arguably deserve some help as well. So trying to replicate the retail, leisure and hospitality relief scheme for bids may not necessarily be the most appropriate approach, depending what happens in your local area. So I'm aware that Maria in our economic development team leads on bid issues. Maria, I'm not sure if you're in on the call or whether there's anything you want to say around bid support or anything we can assist bids on, obviously pending clarification from the Treasury and MHCLG about any support that might be provided.
Hi, yes, I am here. We are aware that different bids networks are writing letters to the Chancellor to ask for support to deal with the levy, because I understand that the levy bills are due very soon, in the next few days, and there is questions about how many businesses are going to be able to pay. So we're trying to speak to the bids to understand better the implications. Some of the bids in London will struggle with surviving if they don't get paid the bills. So the networks have got together to try to address how best they can support them.
There's also a general issue that we haven't raised so far around reporting on payments made to BEIS and MHCLG through the MHCLG Delta system, because we're aware that a number of authorities have identified that the grant they were advanced on the 1st of April, which was 12.2 billion nationally, it's about 1.7 billion in London, wasn't necessarily reflective of the grants they expect to pay. Now, obviously, in terms of SBRR, the grant payments were based on your NNDR1 SBRR numbers multiplied by £10,000. So there shouldn't have been an issue with that unless there's been a significant change since, you know, did your NNDR1 on the number of SBRR claimants, potentially due to workspaces, whatever. But we're obviously aware that some authorities have identified that their grant advance isn't sufficient. So that just reflects the importance of completing those returns every Monday online. Now, we were under the impression from discussions with BEIS last week that reporting was supposed to start yesterday, but we weren't clear if authorities had all had the information or had the suitable Delta registration to complete those returns. We're obviously conscious that obviously when they drafted the guidance, as we pointed out to them, they didn't reflect the fact that we have a number of bank holidays coming up on Mondays. So, for example, next Monday is a bank holiday, so it might have made more sense to make the deadline Tuesday, but obviously Monday is still down as the reporting deadline. So I'm not sure if Adrian or Martin, there's anything you want to add about where we are on the Delta reporting each week, because obviously that's quite important in terms of authorities triggering additional advances if the amounts they're paying out are in excess of what MHCLG and BEIS have already advanced.
I can only say from Westminster side, you have to be set up to get the submission. So even with an authority, they send it to an individual. Mine went somewhere else, which I'm still trying to track down. There's also some annoyance is the wrong word, but across local government, that this is just one more thing to add on, and weekly doesn't make any real sense at all. But we will make the returns when and if Delta's sorted out.
Yeah, I can't add anything to that. I've never used Delta, to be honest, Martin, so I can't give any more light on that, I'm afraid.
Yeah, because I'm obviously aware that there's also a separate return MHCLG is seeking separately on cost pressures, and I think that's obviously again coming through the Delta system. And at the moment, generally the people that get access to the Delta are people probably nominated contact for grant payments, your business rates, retention instalments, etc. You know, housing benefit and other claims, and also for statistical reporting in terms of, you know, RA, revenue outturn, you know, revenues and benefits returns. So, and I think if authorities don't have a name contact, it normally goes to your Director of Finance, which obviously can be slightly problematic if they don't forward it on. So I think it's just worth checking within your authority, because there's likely to be someone in corporate finance or your treasury team that has Delta access, as to whether it might make sense for someone in your revenues and benefits teams who are actually handling the claims to be the contact for this. Because I think at the moment, the more people within your authority who have Delta access, the better, because there still remain various reporting arrangements. You know, the RA returns for 2021 are due shortly in terms of reporting budgets, and also the capital estimates returns for capital reporting. So all of this reporting still has to go on, but you need to make sure you have as many people with the Delta access as appropriate. And I don't quite understand why it needs to be one person in authority, because people will be on leave, they may be off sick. So you really want multiple people with the ability to report this data. Now, obviously, we'll wait for further clarification from BEIS and MHCLG on this as to exactly what's happening. And I accept the point about, you know, it's not ideal really to have it every Monday, particularly as they're asking you to report within 12 hours of the close of the payments made up to 12 midnight on Sunday. But that seems to be what BEIS have asked for, although I'm sure they'll have to relax that, given a number of authorities wouldn't have been able to submit yesterday, probably the majority. And obviously next Monday is a bit challenging because it's obviously Easter Bank Holiday Monday.
Martin, it's Adrian. Can I just add an extra thing into that? Because something I was on a meeting with MHCLG yesterday, and there is likely to be another Delta return. MHCLG are seeking a data capture exercise on estimates of retail relief, nursery relief, how many have been done, how many haven't been done, what's the value of these things. We have requested that they keep any data requirements down to a minimum, but there is going to be something coming out that is going to be asking local authorities to submit an update in effect of those reliefs.
So is that different? Sorry, Adrian, just to clarify, from the return I think that's due on Thursday this week in relation to the cost of the 100% relief scheme. So this is about numbers of businesses as opposed to monetary value, is it?
The one that's due by Thursday is in effect the NNDR1, so the estimate of what you think you are going to award over 2021. The new data capture will in effect be an estimate of where you're at. So you obviously the estimates will be the same, I assume, as the submission on Thursday, but then it's a case of how many have actually been done and therefore how many are still left to do. So it's more of a sort of a progress statement. I mean, hopefully, as Martin sort of highlighted, most authorities are whizzing through these as quick as they can to actually get them onto the right accounts. So hopefully it'll be a relatively short process, but I think it's going to be a weekly data capture. They wanted to tie it in with the BEIS return. We convinced them that was a bad idea. Because the data doesn't necessarily align with the grants. But there will be another data capture for in effect, a progress report.
Okay, thanks very much. Because I expect the majority of authorities probably would have, where possible, suppressed April instalment collections for retail, leisure, hospitality and the nursery sector. But obviously that wasn't necessarily easy in terms of timing. And obviously we're aware of issues where bills are obviously issued to business premises and people might have gone to collect their posts a week afterwards or whatever, and seen the bills and obviously got a bit concerned, and then we're reporting back, that obviously we thought we're getting 100% rates relief. Obviously there may be some of those timing issues locally where the bills will have gone out in the post, but actually the bills were still, the instalment collections were still suppressed for April. But inevitably there's going to be a timing issue, and there will be some businesses that inevitably aren't captured. And obviously there was a bit of uncertainty, as we know, around the state aid limits, which MHCLG have clarified now don't apply to the 100% rates relief. So that's obviously an issue and concern. And I think it's just more generally around MHCLG, as you say, minimising the amount of reporting and obviously ensuring that they at least make some advance payments for the Section 31 grant for the 100% release before the 30th of April, when authorities in some cases could end up with significant cash flow issues because they're still expected to make central share payments, etc. And I presume there's no further update on that, is there, as far as you're aware, in terms of that 30th of April deadline for tariffs and top-ups and central share and etc., Adrian?
I was told yesterday that there are discussions ongoing on the central share. There is the possibility that it will be deferred, but that hasn't been approved or confirmed as yet. But there is a likelihood or a chance that will happen.
Yeah, because that obviously would be helpful in terms of, rather than paying the grant, they could let authorities paying the central share, and then obviously that would ease the cash flow issues in terms of retail and hospitality grant, because it probably it would exceed in most cases the cost of the 100% relief scheme, given it's 50% in authorities outside London, generally contribution towards the call, and 33% in London. So obviously we'll wait for further clarity around that. So in terms of some of the further questions that have been asked, can councils not use their hardship funds to support those businesses that are falling through the cracks? I mean, yes, as with the 100% relief scheme and the nursery relief scheme, these are all Section 47 reliefs, so you will need to develop your own local policies and get them approved by members or your cabinet leads to confirm that you're granting these relief schemes, and that obviously includes the ability to grant hardship relief. Obviously, there are some issues with that, which MHCLG have probably still to clarify, because Section 47 reliefs, if your authority is liable to pay a levy or receive a safety net payment in 2021, that the cost of those reliefs are generally, whether or not government funded, are added to the levy or deducted from the safety net payments. So MHCLG will hopefully clarify that where their authorities are providing hardship relief or using wider funding to support businesses, that won't be penalised for doing that, because obviously that's something the government ought to be willing to support by having their levy payments increased or their safety net payments reduced.
Martin, Martin,
sorry.
Could I just add on the government? I understand that technically you can give other allowances through Section 47. You could be making a rod for your own back. At the moment, we're holding the line. If it's in the government guidance, you get paid. If it's not, you don't. If we start changing around and adding different bits to it, then it's going to open a whole new problem for us, that everybody's going to be coming at us saying it's not in the guidance, but you've given it here, you've not given it there. So I think unless there's a real reason to, I would just stick with the government guidance. As long as you can interpret it that it meets one of the different property uses in the guidance, you're fine. If it's not in there, then you shouldn't grant it, in my view. You can still do hardship, but that's outside Section 47. Thank you.
Yeah, and I think that would probably be my general advice, to avoid having too much local discretion, because obviously then there's an issue about people comparing you with neighbouring authorities, and obviously that ends up with a slight snowball effect of, well, they've done it, so for my type of business, so why aren't you doing the same thing in my authority? So I think, given the scope of the government guidance, and the scale of it, it's probably worth just sticking with that at this stage, but recognising, there's still scope to grant hardship relief for businesses that you feel are of significant importance to your area that you might want to support, but obviously try and keep those to a minimum. Just related to that, I've had a question raised from one authority about their members want to include certain types of businesses, for example, gambling venues and betting shops, from 100% rate relief, simply because they don't necessarily approve of them. Obviously don't think they're in addition to the area, and obviously they're a particular challenge for tackling poverty and gambling and other pressures on sort of low-income families and low-income households. So just wondering if there's any authorities that are looking at excluding any types of businesses listed in the guidance. Obviously our view is, yes, you may not necessarily approve those businesses, but the government are funding the relief, and the expectation is from those sectors they'll be granted. So you should simply grant it because you're not bearing the cost. But we're aware that in some cases members, local politicians might want to include any sectors. So if there's any authorities that are planning to exclude any businesses from 100% retail relief or the grant scheme that are in the guidance, then do let us know, because I'm aware obviously some authorities are under pressure from their members to include certain sectors such as the ones I've highlighted. Anyone, Martin or Adrian, you want to highlight on that?
Only that Section 47 allows a local authority to do whatever they like. I mean, they have their own scheme, and remember the guidance from government is pure and simple the Section 31 grant conditions, and yes, they have the expectation that authorities will follow those guidance and give the relief where applicable, because, as you say, there is no direct cost to the local authority, but it is down to each local authority to make that decision as to whether they're going to implement it or not. My personal view is why wouldn't you? But it is Section 47, and they have to make their own decisions locally on what they want to do.
I would just add that Section 47 is only the vehicle they've chosen to use it, so they don't have to pass other legislation. There is a clear intent that everybody in the guidance should get it, so I don't think you'd stand a very good chance in principle, or if you ever went to court on the basis. I know it's a 47 is a local scheme, but it really is not worth doing unless members put a knife to your throat.
Yeah, further question from Lenny. The detail in the government guidance says in part 14, to qualify for the relief, the hereditament should be wholly or mainly used for the above qualifying purposes in a similar way to other reliefs, such as charitable relief. This is test on use rather than occupation. So I think it's really the authority's discretion there in terms of erring on the side of caution, that, for example, if a premises is, at least 50% retail, leisure or hospitality, that they should grant both eligibility for the grant and the 100% rates relief scheme. But obviously we do recognise it's a bit of a challenge where business buildings are used for multiple purposes. So you could have a hall that maybe is hired out to a charity for a large proportion of the week or whatever, and how you deal with those. So I'm not sure if there's anything, Martin, perhaps you might want to add on those sorts of premises which maybe have multiple uses.
I think there's a general problem that we're trying to get the grants out as soon as possible. What we plan to do is, after the event, is to send a confirmation, as we used to do last year on retail relief, giving them all the uses and ask them to declare that they are wholly or mainly users and for that use. So it's really putting it into their the ball back in their court for them to make the declaration. And we've got, for example, we've got a number of surgeries which I presume are actually in reality cosmetic surgeries, saying that they're beauty salon type places. So we'd ask them to make an original declaration, and then once our inspectors are allowed back on the street, we would go around and visit them to make sure that that's the case, albeit then we're then trying to get the money back after the event. But that's just going to be the nature of the beast, I'm afraid.
Can I add just something in there, Martin? One of the suggestions that was made very early on in the discussions with MHCLG and BEIS regarding the grants, and what has been adopted by Scotland actually, was using the category codes from the Valuation Office as the key piece of data to determine eligibility. It was flagged up in, I think, the first meeting that we all recognise that data is not as accurate as it perhaps could be, and it doesn't really reflect what properties are being used for. So the question seems to make the assumption that local authorities are using that as the be all and end all. I would suggest not doing that at all. It's not what the criteria says. It is around the use, and you can't rely on the Valuation Office list to make that judgment for you.
The only thing I'd say with that is we have to have a starting point. So we'd use the VO analysis codes as a starting point, but you're going to get other businesses coming out from outside of that, such as these surgery ones, which are saying they've got retail use. So we have to have a starting point.
Is now exiting.
No, absolutely, I agree with that, Martin, completely. I'm just saying it's not the be all and end all. You can't rely on that data solely to make that decision for you.
Okay, thanks very much. We've got a question from Chiwong at Kensington and Chelsea
exiting.
about how authorities are intending to manage their 2019-20 year-end bad debt provision policy, obviously given the difficulty of moving forward on recovery, and obviously in the light of the wider lockdown, obviously, trying to get funds not paid already for 1920 from businesses is going to be challenging. And obviously there's probably a wider issue there in terms of 2021 as well, because we're aware that some authorities, not so much in terms of direct debit payments, but for ratepayers that normally pay by backs or cheque or, over the counter payments in post offices or whatever, there has been a potentially noticeable drop off in April instalments. But obviously that hopefully might just be a factor that people simply can't get access to the businesses because of, public transport issues or whatever. So they're not in a position to do those transactions, but be welcome to sort of, if there's any views on that, but we accept obviously there'll be further guidance and support issued around that, aligning to the NNDR3 process, where obviously that will need to be reported. So I'm not sure if there's anything, Adrian, you want to add on that. I mean, perhaps it's something we can check with Caroline at SITFA, and perhaps we can see if there can be any further guidance or assistance on that, because obviously there's an accounting issue there, but it's a practical issue in terms of recovery for outstanding amounts for 1920.
Yeah, absolutely, Martin. And I think it's sort of recognised that really we're in a sort of a crisis position where we're dealing with things from day to day. The bad debt provision really becomes an issue towards the end of the year, so we've got a bit of time to think about exactly what we're going to do. But you're right, there is going to be an impact on bad debt provisions. I've heard lots of authorities telling me that direct debits are being cancelled left, right and centre for council tax and business rates. So I've got no doubt at all that there will be implications. Caroline and I were having a conversation yesterday about the potential for a lot of authorities being in the safety net position because of the impact. But obviously we don't know that. It's just sort of speculation at the minute. But yeah, we're sort of aware, as are MHCLG actually, that there are potential issues around that.
And I think just on that point, we obviously recognise that will throw up particular issues for billing authorities who obviously will wait for some flexibility potentially on central share payments. We'll obviously be bearing the initial cost of that non-collection up front and won't be able to pass it on to preceptors and potentially MHCLG until after the end of the financial year when the NNDR3s were done. So obviously we'll need to keep an eye out on that in terms of it potentially affecting billing authorities' ability to actually make the instalment payments that have been agreed through NNDR1, because the assumption is in theory that the Section 31 grant they'll get for 100% relief compensates them for the lost revenues, and therefore we should be in a position still to stick with the NNDR1 profile, but obviously we'll just have to monitor that during the year. There's a question from Kaya: how are councils advised to deal with a situation where a small business does not directly pay business rates and so they don't have an account reference? So examples, for example, where the landlord pays rates, which could be and wraps up the rates of the rental bill, which obviously is like to occur for perhaps street markets, often where the local authority is a landlord in some cases, and more particularly with flexible workspaces and incubator spaces, etc., where people normally pay a rent, which includes business rates, where they haven't already been, where that premises hasn't been split for SBRR purposes, so they don't get business rates relief or potentially eligibility for the £10,000 grant. So I think it's just whether there's any views, Martin, on how you're dealing with that in Westminster with your workspaces or markets, if they're applicable. I'm aware there's an issue in the City of London as well with their markets that they run. So
yeah, I think there's two bits really. The big building that should be split into lots of little individual ones. My take on this is that if we've raised BAR to the valuation officer, valuation office asking for it to be split prior to the 11th of March, we could use discretion when the VO splits it to pay the grants to the individual businesses. In relation to where the properties are already split and we're billing WeWorks or other companies rather than the individual companies, under rating law, you should always rate the individual occupying small business, which is what we do, and then we sometimes send the bill care of WeWorks. That works because the small individual company would get the grant. The problem arises if you're billing WeWorks for individual assessments. So in a property of 10 little units, and you're billing WeWorks on those, we can't pay the grant because the little company isn't in occupation on their list. The only thing I suppose you could do is to change the liability and put the little company in each of the 10 properties and then grant the grant, because that's technically in what you're meant to do under rating law. But we're not going to pay WeWorks any grants, so direct. I'm not sure that helps, but I think you can use your discretion to put the individual companies in and pay the grants, as long as you knew that position at the 11th of March.
Yeah, I think that's helpful because there is a bit more flexibility around the grants in terms of interpreting the guidance to support those particular businesses. We've also been an issue identified with hospitality businesses being denied the grant because the premises listed on the rating list as warehouse and office. Now, I think general view is that it should be based on the actual reality as far as you're aware on the 11th of March. So it is actually being used as a hospitality business on that particular date, and the ratepayer can provide evidence of that. Then in theory, they ought to be able to qualify for the grant and receive the grant if that was the actual use and that can be demonstrated. So again, I presume Martin, Adrian, you'd agree with that. It should reflect the reality, not necessarily what's on the rating list where evidence can be provided that that's the true reality on the 11th of March.
Absolutely. I just think we need to be a little bit careful about what we mean by leisure and hospitality, because the eligibility for the grants relates to the use of the premises. So obviously I don't know that particular property, but I was asked a question around, for example, a event hire company, where they were hiring out lighting that they supplied to events. Theirs was a warehouse with an office. Obviously, the lighting equipment was stored in the warehouse, and the office was where they dealt with the actual administration. That's not in the guidance. so that wouldn't meet the criteria. It's still a warehouse and an office. It's not a hospitality or a leisure premise that's easily accessible to visiting members of the public. I mean, that's another key criteria in all the guidance is the accessibility by the general members of the public. So I just think we need to be a little bit careful. It's not necessarily about what the business does, it's about what the property is used for.
Yeah, thanks so much, Adrian, for that. So, because obviously there is a slight issue. Yeah, sorry, like Martin, yeah.
I wouldn't know, just going to add to that, really. The key to all of this is actual use, not any categorization by planning or the VO, etc. As I said before, I think that you're right that we do have to be careful here. I think if a ratepayer turns up and says, I've been in there since the 10th of March, then they need to provide evidence. We just can't take their word as though we would do in a normal circumstance. And in relation to the valuation changes, if we didn't know about any change, say WeWorks have got a property with a nil rateable value while they did it up, they sit on their hands and don't tell us anything. The individual ratepayers don't tell us anything in the meantime. We don't raise a BAR. Then I think we have to be a bit careful that they can't suddenly come out the woodwork after a year and say, "Oh, we were there all the time," because we weren't aware on the 11th of March. That was all.
Okay, and a couple of questions linking into obtaining information from businesses to enable authorities to process the rates relief, and particularly the grant payments, and also around using various systems and other alternative data sources you have to minimise fraud prevention and minimising errors. So I'm aware that a number of authorities have set up web pages to allow businesses to report their bank and email details and other appropriate information, so that to allow them to pay the grant. And obviously, whether there's any views, Martin or Adrian, around any steps that can be taken to minimise fraud. Obviously, Bays have highlighted their spotlight scheme, which obviously Martin has highlighted some reservations with, about approaches that are being adopted to get data from businesses to actually allow you to pay the grants, and also secondly about how you can minimise fraud and error as much as possible.
From my side, we're sending emails out to companies where we've got email addresses, and we try and put some security in there. We're giving them contacts and confirming that the emails are coming from the email on their annual bill, etc. But we've still had some queries about whether people are being scammed. I'm not sure how individual authorities are using their website to do it. If they've got some facility which is a secure log-on, which allows only that business to input their bank details, and that's fine. Anything else, you're opening the risk of any old company coming in and sticking their bank details on for another person's property. In addition, for anybody who's not aware, there is at least one company out there now who's trying to sell a service of claiming they're asking for £100 to get your grants for you. Obviously, that's not what this scheme is about, and companies don't want to lose yet another £100 to these scams. So we've put a thing on our website to make sure that everybody's aware not to pay these third parties. So it's just something you might be aware of and might want to do yourself. Thank you.
Yeah, thanks. I think a couple of questions around business rates instalments. Now, the expectation is the instalment schedules, as previously advised, with the first instalment scheduled on the 30th of April, and then the next one on the 19th of May, and then normally the 19th or next working day of the month. We expect that will continue, but obviously we'll hopefully MHCLG provide some clarity, as we've highlighted, around central share payments and the Section 31 grants for the 100% rates relief shortly, to ensure that billing authorities don't have any cash flow issues. So the expectation is the instalment dates will remain the same when you pay obviously central share payments and tariff and top-ups, but obviously as to precisely what will be expected to be paid to MHCLG still has to be clarified. But certainly in the context of the London pool, we're still working on the basis of these same instalment dates and the same profile, but obviously we'll have to respond to any advice or guidance that MHCLG issues. There's probably a general question from Diana Haringey around the retail relief guidance and the list of businesses and sectors included, as to whether you can include other businesses that aren't listed but potentially on the margins. I know one example that often comes up is car garages just doing services, MOTs, repairs, placing tyres, they're not explicitly listed, but my view is that they're rather an essential business at the moment, because obviously people need cars, to particularly key workers, to get to work, and they need cars that work, and they need, you know, services being done on their cars to make sure they're fully functioning, particularly as given the restrictions on public transport usage. So they're an example of where I would consider, you know, they're a retail, leisure, hospitality business providing a service that are generally accessible to members of the public, so they would qualify, but they're not listed in the guidance. So I think you can obviously take a local view as to whether or not you think they meet the retail, leisure, hospitality description. And obviously we've identified in the last week or so that, you know, country clubs, private members, gentlemen's clubs aren't explicitly listed. They're called clubs and institutions, but they would be eligible for both retail relief and the grant scheme potentially if they're below the 51,000 RV. So that if they're not explicitly ruled out in the guidance, for example, as, you know, professional premises, solicitors, accountants, vets or whatever, then if you consider their retail, leisure and hospitality, then they should be eligible for the relief. And obviously if you can feel you can justify that to MHCLG, if your audit if it's challenged, then that should be fine. Anything to add on that, Adrian or Martin?
Yeah, just one thing that from the horse's mouth, that were MHCLG are expecting a generous interpretation. I'm not suggesting that you shoehorn everything into a qualifying criteria, but they are expecting authorities to apply a generous interpretation of the guidance.
And then, sorry.
So now, there are going to be grey areas. I have to say, I'd struggle to get garages into any of the criteria, but I think generally, as long as you can have a common sense argument of how it fits into a criteria, you should do that.
Well, I think you'd argue that they're sort of selling oil, they're selling, you know, windscreen wipers, tyres as part of their service, and they're generally accessible to members of the public, so anyone can turn up and get that service delivered. So I suppose they're a generous interpretation. They're not explicitly ruled out, as is the case with, you know, doctor surgeries, dentists, vets, etc., or accountants, solicitors' premises. So they're a grey area, and I'm aware that some authorities were granting them retail relief and some weren't in 1920. So I would sort of generous on the side of caution, simply because they are, you know, a very important business at the moment, because people need, particularly key workers, need their cars to get to work, and they need somewhere to actually get them done. And they're generally mostly a lot of small and independent businesses as well. So that would be one example. It's also a question.
Sorry, Martin. Can I just sort of back up Martin Hinckley with that, because I'm sort of with him. I didn't like to say, but I'm with Martin Hinckley on that one. Because yes, they sell oil and windscreen wipers, etc. But is the property wholly or mainly used for retail, or is it wholly or mainly used for providing MOT services, etc., etc.? Tyres, I think, is slightly different because it tends to be supply and fit, but the repair garage, I'm not so sure.
I would suggest that's a hardship one if you're going to do it, but that's
yeah. I mean, there shouldn't be too many cases, but obviously, again, you know, we were aware that authorities have made different interpretations for that particular sector in 1920. So, you know, within the context of generous interpretation, but having regard to the guidance, obviously take your local views depending on the circumstances. Issues highlighted around landlords looking at ways to support businesses, obviously through rent reductions. And again, you know, obviously local authorities may be doing something similar for their premises, but, you know, there's obviously issues about authorities therefore then providing confirmation they're not going to get those grants or retail relief so that those landlords can support them. It's slightly circular, because I think, you know, the assumption is that if they haven't, you know, been granted the grant or the relief, then they should, you know, be in a position to confirm that to landlords and get some sort of support with rent reductions. So it's really more for the relationship with the landlord than I think that local authorities can provide any certainty on. And obviously the advantage of getting the grants out as soon as possible and obviously suppressing bills is that people should be aware very quickly if they're not eligible. But clearly businesses that haven't been granted grants or haven't been given rates relief and consider they should be, you may want to, you know, say on your website, if you think you are eligible and you've not been granted relief or grants, then do let us know. The issue around, as I've highlighted, dentists, opticians closed for health and safety reasons, but whose rateable value is over 51,000 and not able to claim anything. But I thought those, along with other professional services, aren't eligible for retail, leisure and hospitality relief either, or I assume the grants. That's correct, is it, Adrian and Martin, that they're one of the categories explicitly excluded because they're health, absolutely. So they wouldn't be eligible anyway.
No, but I think the point is, I think it's making the point that there isn't any support for them. Is there going to be any? And the answer is who knows. I mean, I think you said at the start, Martin, that yes, we have a list at the minute, but it could quite easily be extended at any point in the future. And there are other sectors as well. I mean, obviously we mentioned dentists and opticians there, but manufacturing and industry, what support are they getting? There's lots of different sectors that aren't currently getting any government support at all, and that's something for government to make a decision on whether they want to provide any kind of support for us to then implement.
And obviously they did extend the relief scheme to letting agents and estate agents, so you might arguably perform similar sort of advisory functions to functions to those businesses that are explicitly excluded. So that was obviously an exemption, a change that the government made in response to pressure from those sectors. And obviously, while the housing market has stalled, there are still viewings going on and sales going ahead. So those, in some senses, those businesses are partly still operating, whereas lots of dentists and opticians are simply closed, except for emergency cases. They're not fully operational. So there are some quirks and inconsistencies within the guidance and the criteria, which obviously is worth us highlighting, and obviously those sectors highlighting as well, in case the government, as you say, has a change of heart.
Sorry, the government just didn't pick these at will. I mean, they know the cases they've ignored, like all the offices, etc., which is about 60% of our entire database is still going to be charged with no relief. So it's purely a case of funding, in my view, because otherwise they could have just said, well, there's no business rates for anybody in 2021. They didn't do that because I don't think they can afford to do that. It's just too big an ask. I mean, it's an enormous amount of money they're spending already. So although they could tinker at the edges with, I don't know, dentists or somebody, but the big ones, I don't think there's any real chance of them being able to do anything, really.
Oh, I think I agree. I think it's just the fact that they've sort of started from this premise of retail, leisure and hospitality and ignored everyone else. And actually, if they just followed the Northern Ireland scheme and given a 3-month business rates holiday to everyone except the public sector, it would have actually cost less, because you'd only lose 25% of the income instead of 35 or 40%. But obviously we can't row back now, and the Chancellor can't retract his offer. But it is very inconsistent that you got the major supermarket chains getting £3 billion of business rates relief, but a small business occupying a premises of £15,100 gets absolutely no support at all if they're not in those 3 sectors. So we are where we are, and obviously the government can't row back, but there were alternatives such as the approach adopted in Northern Ireland, but we are where we are, so we have to move ahead with the schemes the government has announced. Okay, so question from Derek: can councils ask SMEs to provide a letter from their accountants elegant at the eligibility under the government criteria? So I think that's more an issue about them providing evidence that they're a business operating in that sector. So that could be one example. There could obviously be other sources of evidence that they could use as an evidence base for the grant schemes, and also potentially retail relief in terms of their class of use. So that's probably more around evidence gathering for businesses that potentially on the margins, or whether there's lack of clarity or certainty around the use of the premises. So obviously, Martin, maybe other examples you have as well of that.
Sorry, I missed. I think you're talking about evidence.
Yeah, well, I think it's evidence where you've got something that might be listed on the rating list as an office, was actually being used as a cafe or whatever, and it wasn't, that position wasn't clear on the rating list on the 11th of March, but actually they can evidence it was a cafe, so therefore, they should be getting the grant and the retail relief.
So what we're doing is sending them a form asking, we're not paying them direct, we're sending them a form saying, here's the list of the usage, the state aid thing, getting them to sign, declare that that's what the usage was. And then, as I said before, once we get the chance to get our inspectors back on the street, we'll go out and check that they tell the truth, and then reclaim it if necessary. But yeah, we need some sort of evidence if they're not an obvious one. And
then question from Derek around business headquarters and premises. So as to whether they should be getting grant. Now, I think my view is that if it's a business headquarters, their offices generally, and they shouldn't be getting grants or retail relief. It's only the actual operational premises, stores, cafes, outlets. So if you're the major supermarket chains, their headquarters building is an office, so it wouldn't be eligible for grants or retail relief. But so it should be the frontline stores that are generally accessible to the public that qualify, not the headquarters. I'm sure you'd agree on that point. Yeah.
Yeah, agreed.
Okay, there's an issue around empty property relief, which I'm aware that MHCLG are looking at, because obviously a number of, particularly people in the office sector and others, have made an argument, well, their offices are empty, therefore they should get 3 months relief. But clearly under rating law, premises are still occupied and, you know, they still have IT, furniture and equipment in them, so don't at first glance under legislation qualify. But I'm aware that, Sue Martin, you've been putting out response notices back to those rating agents and businesses making those requests, and I think we're still waiting on MHCLG to clarify things, but the assumption is they shouldn't be eligible for the 3 month or 6 month for industrial premises empty relief at this stage.
That's correct. I mean, we've got 100 years of legislation and case law confirming what is empty and what is occupied. Our view is very stark, if you like, in that that hasn't changed. If a property was to become empty, they moved all the stock out and everything, then it would be classed as empty. But the second stage is they'll go for prohibited from law empty rate exemption, which again we just said doesn't apply, and we haven't got council's opinion, etc. But that's our stance. But MHCLG, I've had discussions with them. They're still looking at it. They have to fall on our side, or we wouldn't be collecting anything this year, because every property will try the same thing. So I'm sure it will work that way in the end, but whether they have to pass emergency legislation or something to clarify, I don't know. But if everybody holds that line, then I think we'll be in a better position. If some go try and give the prohibited by law, which will confuse the matter. Thank you.
Yeah, and then just a quick follow up on the car garage point, that apparently IRV guidance is that they should be getting relief scheme in the grants. So perhaps we'll take that offline between SITFA and IRV and see.
Well, can I just add
that? So
can I just comment on that, Martin? Because
yeah.
actually, I raised that with Gary Watson of the IRRV yesterday, because I was asked for a second opinion after the IRRV had said that yes, they would qualify, and I said, well, I don't think they do. So I've taken that up with Gary Watson at the IRRV. So I said we should have a consistent message on this. We will have difference of opinion, because obviously it is interpretation of the eligibility criteria, but it would be nice if SITFA and the IRRV could have a consistent message. So I'm just waiting for Gary to come back to me on their interpretation of why they think that they do qualify. So I am already on that one.
Yeah, because I'm conscious the car garage I get my service and MOT done has a rateable value of £16,000.
So the question was from you, Martin, was it, rather than anybody else?
No, someone actually pointed out that there's been a bit of a query on the chat. IRV technical queries consider that vehicle repair shops are eligible, and you know, that's just a few calls in the chat on from that, including on, you know, to be clarified between RV and just generally if that's the correct advice or not for authorities. But we are aware that some authorities in 1920 did grant retail relief to those businesses and others didn't. So, and I think more slight inconsistency of approach, because it's one business that is a slightly grey area. Okay.
Is now exiting.
I think one final question before we conclude around mechanisms for reclaiming a grant payment which has either been paid incorrectly or turns into a bad debt because they're still liable to pay business rates on other properties, but or that property
is
but
now
they
exiting.
haven't paid it, as to how authorities might deal with that. And we accept that that's obviously an issue that will come through, you know, during the course of the financial year, because there may be some businesses getting the grant that, you know, would have had bad debts or didn't pay their 1920 business rates. So again, I think that will just have to be dealt with through the normal enforcement and collection processes, unless there's anything, Adrian and Martin, you want to add on that.
But the grant isn't NNDR as
I accept it's not. Yeah, I think it's just how authorities manage that, because they obviously, as you say, they're independent.
So I don't, well, off the top of my head, I mean, it's a question what every authority will have, because of SBRR ones will have moved, etc. So I presume it wouldn't be recoverable through the magistrates court as an NDR. I presume it'd be like a county court debt. So if people didn't return the money, so if somebody got the money, wasn't entitled, did a runner or refused to pay, then I presume you'd have to go through county court.
Is now exiting.
And I think that presumably would apply also to grants that were paid in error to businesses who'd already obviously cashed the cheque or received the bank payment, in terms of clawing that money back. I mean, obviously, as you say, that would have to be the process you'd go through if it was decided it was material enough to worth challenging on. But obviously, there's a limit to how much you want to start trying to follow up on multiple £10,000 payments, because obviously the costs become quite significant relative to the benefit. But okay, so probably one last chance to ask any further questions before we close the call. Obviously, we'll do our best following this to, as been suggested, pull together a list of frequently asked questions. Obviously, I'll agree any answers around that with Adrian and Martin as well before we respond. And obviously, the conference call and webinar has been recorded, so I think hopefully GLA will make that available in due course to participants, and obviously we can send those out through our London contacts and also through the collection fund network for authorities outside London. So I'd just like to thank you all very much for joining us in the call, and to GLA colleagues in economic development for arranging the meeting, and also particularly thank you to Adrian and Martin for joining me and trying to answer questions that I've not been able to deal with, or potentially given some slightly wrong advice on. So obviously, if there's any further questions, feel free to send those through to Tarjas at Westminster, who's obviously the Collection Fund Network contact for authorities outside London, or to myself, Martin Mitchell, at the GLA through the usual GLA budget, and my own personal address for London contacts. And obviously we'll do our best to answer them. And obviously you will have your local networks through London Revenues groups and your own county contacts in terms of sharing information and knowledge and different approaches. So I'd just like to thank you again for joining the event, and I wish you all the success in implementing your grant schemes and also the 100 business rates relief schemes over the next few weeks. Okay, thank you much. Goodbye.
Thank you.
Multiple people are now exiting.